You've just had a nightmare quarter with Snow White flopping, Captain America Brave New World showing Marvel is dropping, and Disney Plus failing to track on the Nielsen ratings. So what do you do to save your flailing stock? Well, if you're Bob Iger, you go somewhere hot. Today, Disney announced a brand new theme park in the Middle East. They just didn't want to tease too much that they won't own it. Hello, ladies and gentlemen, and welcome back to the Pro Channel, where we as ever endeavor to explain entertainment. Keeping you ahead of the culture curve is what we do, and we put the magnifying glass upon the House of Mouse, and we are happy to do so today. We have info that you are probably not going to hear anywhere else, and the kind of analysis you need to understand what the heck is going on. We told you it would be a nightmare quarter. We told you that things were going down, down. Not the witch's road, but the drain. And guess what? Disney, well, they rained on the parade of the haters. Or did they? Folks, click the like button. We're going to get deep into the weeds, but you need us to do so to explain what's going on. Take a look at this. The Disney stock today, if you own it right now, at the time of this recording, is down 6.55% versus 5 years ago. If you own the Disney stock for 1 year, you're down 3.25%, but the Disney stock is up versus yesterday and the days before. In fact, if we look at the 5-day, you'll see that Disney had a major pop up after this announcement of a theme park going in the Middle East, out into the desert. So we're not going to be I'm not trying to skew you negatively to say that it's down when it's up, but I want to show you a deeper level analysis than I think most people are going to do. To do that, what we need to do is go back to November 13th or 12th. They're about the same, so it doesn't really matter, but there was a Disney earnings call for Q4 of 2024. Now, Disney does earnings calls, but the last quarter also had the shareholders meeting, so it gets a little murky. So we're going to go back to the last one that was just a normal earnings call, and that was November 13th, 2024. And you'll see that the stock on November 13th, 2024 was $102.72. Following the earnings report, the Disney stock jumped up to $115.08. Hard to grab these exactly, but that's it, $115.08. Okay, so that was an increase from the 12th. It was at 100, then it went to 115. So that was an increase of about $15, and since it was almost at $100 even, that's really easy to say. Right around 15% increase. Easy math, eh? Today, as of recording, we're looking at a stock that was at about $92 and has gone up to $101. So versus the $15 immediate jump, and we don't know where this will land by the end of the day, but we're seeing about an $8 increase, something like perhaps half of what we saw versus the prior normal earnings call. Okay, so about half. And that's why, folks, if you look at this, you'll see that Disney stock right now is hovering at about the midway point over the last year. Now, you may have heard that the Disney stock has been the worst Dow 30 performer over the past 10 years, and that's correct. So being back in the middle is not fantastic. Although, if you're just measuring along the 5-day, you got to say that going up 11.46% is a win no matter how you slice it. The problem for Disney is that their stock tends to do what we call a pop and drop, and we're not giving any kind of financial advice here. We'll get to the theme park news in just a minute because it's directly tied, I believe, into them trying to stop the free fall that typically happens. Like Tower of Terror, the Disney stock, when they make these big earnings calls, they come out and they fluff up the crowd and they talk about a lot of really happy, pixie dusty, magic-y kind of things. And then as people digest the real numbers behind it, the stock tends to come down. Disney is attempting to stop that from happening this time with a big announcement. This is the effort that we were waiting for. We've been talking about this before. What was Disney going to do to try to save this earnings report? Because, as we've talked about, it's been very obvious publicly that Disney is struggling mightily in a variety of ways. Snow White did not do well, and that's an understatement. Captain America Brave New World did not do well, and that's an understatement. The ratings on Disney Plus just don't show up anywhere. And by the way, there's quite the fuss about attendance at Disney parks. I'll show you this. This is the wait times out of Thrill data for Walt Disney World, and you can see that the attendance, if it's correlated at all with wait times, has been going down steadily since 2022. We'll come back to that because Disney had a different claim today, and I'm going to explain what I think is going on there. And that'll be, folks, don't go anywhere. You want to know this stuff. All right, the big announcement. Disney announces plans for new theme park and resort with Miral in Abu Dhabi. The Walt Disney Company and Miral, Abu Dhabi's leading creator of immersive destinations and experiences, announced an agreement to create a landmark Disney theme park resort in Abu Dhabi. In fact, this was such a big announcement for the Walt Disney Company that Bob Iger and Hugh Johnston, they were both over there. That's the CEO and CFO. Both appeared to be in Abu Dhabi for this earnings call. So they wanted this to be a big, big deal. This is their way of making you not ask them questions about Epic Universe and perhaps the Walt Disney World Resort falling to number 2 behind Universal if Epic Universe is so successful. The waterfront resort will be located on Yas Island, a world-class destination for entertainment and leisure, connecting travelers from the Middle East and Africa, India, Asia, Europe, and beyond. This 7th Disney theme park resort will combine Disney's iconic stories, characters, and attractions with Abu Dhabi's vibrant culture, stunning shorelines, and breathtaking architecture. The problem for all of this, the problem is, and Disney doesn't just outright come out and say this, they do in the, when you get in the fine print, they admit it. Disney won't own this park. Disney's not going to own this. This is a licensing agreement, right? This is another company that's going to build this. They're going to do all the capital for this. They're going to pay for everything. And Disney's going to act as a consulting firm that gives them Mickey Mouse and Donald Duck, all that for a cost. It says Abu Dhabi is a place where heritage meets innovation, where we preserve our past while designing the future. His Excellency, Mohammed Khalifa Al Mubarak, Chairman Admiral, said. The collaboration between Abu Dhabi and Disney demonstrates the remarkable results of combining visionary leadership and creative excellence. What we are creating with Disney and Abu Dhabi is a whole new world of imagination, an experience that will inspire generations across the region and the world, creating magical moments and memories that families will treasure forever. Through the development of unique attractions and experiences, Abu Dhabi continues to be a destination of choice for the world. Now, I want to go up and show the concept art again. The concept art is clearly and purposefully very vague, and you'll notice that there's not a castle in the middle of this. It's a giant, what appears to be crystal prism, P-R-I-S-M, prism. Now, the reason for that is because this might not be really a Disney park other than being given the Disney name and some Disney IP to go with it. Now, let's go to the map of where this might go, because this is Disney's way of saving face after a very bad quarter. This is Disney's attempt, because remember, Disney only has gone up half as much. They like to really do these fluffy, puffy earnings calls where they really tout the magic. This is Disney getting half the bounce they had since their earnings call in November of last year. This is their attempt to hold on to the momentum and keep you unfocused from Epic. But folks, look at this. This is Yas Island, and Yas Island is where Ferrari World is. Warner Brothers has a theme park there. You can see Warner Brothers World. And SeaWorld has their park here. The problem is that when Disney made this announcement, it comes across as feeling like they're announcing a new Walt Disney World, right? This is a big thing. This is Tokyo Disney. And the reality is that if you look here, and we've done the math, if you look here, unless they're going to add land out into the sea, which they could do, but unless they're going to do that, unless they're going to put land out into the sea, the largest area they appear to have is about 180 acres of land. Now, if they're under 200 acres, what that means is that they have something like 1/3 to 1/4 the property as Epic Universe for whatever they're going to do here in Abu Dhabi. And that makes sense because Abu Dhabi is in the middle of a desert and most of the stuff has to be indoors. So what I would suggest is, folks, and I'm not trying to be negative about this, I actually think this is a positive for Disney. There's no negative here in terms of somebody else is building it for you. It's going in a very high income location. Iger calls it the crossroads of the world. I don't know that I would do that, but there's really little downside for Disney on this. But in terms of the way this is going to be reported, you come here to get the truth with a capital T, and that's what we're going to deliver to you. I just want to temper expectations, appropriately so. There are going to be those out there who are like, Disney's putting in a new Walt Disney World in the Middle East. Disney has, and by the way, this comes from Iger because he came out and said, in the history of Disney, there are moments that stand out. And he listed out like Disneyland and Walt Disney World. So he set the expectations here. This is a very small park unless There is a huge investment beyond what we understand at the moment. Unless they are going to build out into the sea, then this is limited in land. It's a very small theme park that does not appear to look like any Disney park before, owned and operated by a different company with Disney just acting as a licensing partner. So temper your expectations. But the reason for this announcement appears to be that Disney wants to stop the bleeding. They want to get the pop that they so often get out of these earnings calls, but then they want to hold on to the momentum as best they can. And that's probably why they've scheduled their big ESPN announcement for the next week or so, right? So did Disney get a win today? Well, they're up 10% plus at the time of this recording from day to day. They're up 11% over the 5 days. They're up 22% over the month. But again, folks, we believe in not being extreme. We believe in giving you the truth. The truth is that Disney has placed itself back in about the middle range of the last year. In fact, they're down 3.6% on the 1 year. Okay. So after all of that and seeing the difference in the jump here and the jump that they had back in November, what do we say about the nightmare quarter? And was it a nightmare quarter? Well, let's dive into those numbers real quick. And let me say that when we talk about the nightmare quarter, what we're saying is that in terms of cultural relevancy, in terms of Disney having box office success, in terms of Disney doing well at their parks, domestically especially, but also internationally, in terms of Disney doing well with streaming and kids consuming their content and wanting to buy their stuff, it turns out that consumers said enough. And Disney indeed did have a nightmare quarter there. Financially, though, they shored up some things that are really important. Let's go through this. You're going to get the absolute full spectrum of knowledge so that you have a PhD level of understanding of what's going on at Disney and what happened with this earnings call. This is by Dade Hayes. It's out of Deadline. Disney reports better than expected quarterly numbers, driven by experiences and sports. Hang tight, we'll explain. Strength in Disney's experience and sports divisions propelled the media giant to better than expected results in its fiscal second quarter. Also note, this article likely, if I have my timeline correct, this came out before the Abu Dhabi announcement, so they weren't aware of that. Revenue in the period ended March 29th increased 7% over the same quarter a year ago, reaching $23.6 billion. Earnings per share, excluding certain items, hit 1.45 on a diluted basis, up from 121 in the 2024 period. The top and bottom line figures were comfortably ahead of Wall Street analysts' expectations. Now, that's where this all comes into focus. Wall Street had an expectation, Disney outperformed the expectation, and now they're looking forward to a quarter that has Lilo and Stitch, and where they're not discussing with analysts that Epic Universe might actually eat their lunch. And because of the level of resolution that people look into these sorts of things, there's not necessarily the same understanding that you and I have coming from investors as to what Epic Universe represents, nor are people understanding exactly what it means for market share domestically. Investors cheered the report, boosting shares more than 6% in pre-market trading. You've seen it's up 10%. The upward movement was a welcome change for shareholders, and it's going to go on to give a political opinion about why the stock has been down as of late. So here's where but folks, you may be saying to yourself, now, how can this be, Pro? How can it be a nightmare quarter in terms of cultural relevancy, which would be a transactional measurement at the least, and yet at the same time, revenues went up? Well, here's what happened. The sports division benefited from the expanded college football playoff and an additional NFL game compared with the year earlier quarter. While production costs rose due to 3 extra college football games, domestic ad revenue in sports surged, listen to this, 29%. Disney is not wrong to have 1/3 of their company focused on sports. Now, I disagree with the amount that they're spending on things like the NBA. And this is not one of the things that we discuss very often on this channel because we're not a sports channel in the same way that we're not a political channel. And so I'll give you an example on that. We will discuss at times, and quite often lately, the ramifications of political decisions from the Trump administration, or we'll discuss the entertainment companies, what they're doing in response to the Trump administration. But if you come to this channel for us to discuss with you what exactly the tax rates should be on income brackets, you'll never hear us talk about that sort of thing, because those are the traditional political discussions that are outside of our purview. If Hollywood is going to get tariffs, that are going to change the entertainment landscape, well, we're going to talk about that. But distinctly, specifically political items, we stay away from because we believe other people cover that sort of thing. In the same vein, we don't talk about sports that much because we're not a sports channel. But when it comes to the impact that it has on the Disney company, that puts it right into the wheelhouse of what we do. Sports lifted Disney dramatically. And investors are waiting to see what Disney has up their sleeve in the next week or two with this big ESPN announcement where they're going to have a brand new app that will integrate betting and fantasy sports all into it. Experiences, though, we need to go there. Experiences was an overall highlight with operating income up 9% to $2.5 billion. Now, notice that operating income refers to profits minus taxes and other expenses beyond just revenue and payouts. U.S. parks saw an upswing in attendance, and per capita spending by guests increased, while bookings for the new Disney Treasure cruise ship also are on the rise. Now, we have reported time after time after time here on this channel that attendance appears to be going down at Walt Disney World. And again, to go back to Thrill Data, the reason that we say that is because we don't just rely on anecdotal evidence, but because we have Thrill Data, which is reporting the aggregate of all wait times across Walt Disney World. And you can see in this chart that since 2022, wait times have been in a decline, even despite that in 2025, there are less attractions today in Walt Disney World than there were a few months ago. So the natural result of that, logically, would be that wait times would increase if attendance just stays the same. And yet, because wait times are decreasing at the same time that attractions are decreasing, it's a strong indicator that there are fewer crowds at Walt Disney World. Now, the last 3 months have not looked great. So the months that have been measured in this latest one, January had an average wait time of 35 minutes at Walt Disney World. February had an average wait time of 34 minutes. And March had an average wait time of 36 minutes. If we go back to 2024, January had an average wait time of 40 minutes. February had an average wait time of 41 minutes. And March had an average wait time of 40 minutes, which would seem to indicate something like almost a 25% slide in attendance. So why would that not show up in the earnings report? And why would Deadline be reporting otherwise? Are we completely wrong? Does Thrill Data have the data completely askewed? Well, ladies and gentlemen, we're looking into this, but I have a clue. One of the things that we're checking on is Disney has delved deep into VIP after-hours events that sell out time after time after time. They're doing and I'm not suggesting that this is the full answer, but the Mickey's Not So Scary Halloween party. They've got the Christmas stuff. They're doing all of these after-hours events, and they're basically year-round now. And the question that I have and that we're going to begin looking into is, because everything we show, everything indicates to us that perhaps attendance is not doing well. And by the way, we pay attention to actions. Disney is discounting like crazy Disney World for this summer and all of next year. Things we've never seen before. Things like visitors from the UK getting 60 to 70% off. Things like kids eating free at Disney World in 2026 like it's a Howard Johnson. So, if Disney's actions suggest otherwise, and if the empirical evidence that we have through Thrill Data suggests otherwise, how is attendance being reported as up? Well, I wonder and I speculate, is Disney counting after-hours ticket sales now in their assessment? They would not have to announce that. And they don't give us any actual attendance numbers. They can tell us it's up, but they don't tell us the real numbers, which would be nice. Most companies do that, by the way. If you look at car companies, for example, they say the number of cars they sold. Disney, as a theme park company, one would assume would also say the number of tickets they sold. But they don't. And they don't break it down. And they don't tell us, are you now including after-hours events in order to make that appear larger than it might be otherwise? I don't have a problem with that. In fact, I think it would be wise and it would be more transparent if Disney is telling us how many of these after-hours event tickets are being sold. If you're counting those as day tickets, or the same as a regular ticket, cool. I love that because I think those have been very successful. But we need to know it because otherwise it might be construed as misleading, although not unethical or illegal. It says revenue in domestic parks and experiences and consumer products climbed by 13 and 14% respectively. Another problem here is that when you combine segments together, which are not necessarily easily construed as being the same thing, it's difficult for me and for you and for the investor, and perhaps this is intentional, to track exactly what this means. Domestic parks is, well, the theme parks. Experiences is everything else, including video games. And consumer products, well, that's all the merchandise. When you add those things together, it's hard to say, well, are toy sales up or are theme parks sales up? We don't know, and it's intentionally so. Streaming also continues to show progress with direct-to-consumer operating profit increasing from $289 million to $336 million. Now, that's a modest gain. I know that looks like a big number, but compared to Netflix that's making billions of dollars every quarter, it's a very modest gain. The company only a few quarters ago started turning a profit in streaming after a grueling 5-year rollout of Disney+. We now believe, by the way, that Disney is basically riding off the coattails of Hulu and its integration into Disney+. Hulu is making the money, and there's still no announcement as to when or how Disney is going to pay off the billions and billions of dollars that they still have to pay to buy the rest of Hulu, and they're on the hook to do so. The streaming flagship hit 126 million subscribers, up 1.4 million from the previous quarter. So that's where we are, folks, in terms of the earnings report. Do I have my doubts on some of this stuff? Well, you bet, because, folks, when you look at the box office and you see how Disney presents it. In fact, let me show you this. Let me show this to you. Real quick, though, before I do, 126 million subscribers on the streaming flagship for Disney. Netflix, as of the end of last year, had over 300 million. So that's why I'm not hugely impressed by it. This, though, is the telling part, because this is the part that you know and I know the actual statistics here, and there's no doubt about it. We don't have to trust the real data. We don't have to trust any other source of information. You all know the numbers. It says at the movie studio, strong carryover business from holiday releases Mufasa, The Lion King, and Moana 2 was, quote, largely offset, unquote, by the results of Snow White and Captain America Brave New World. Now, we believe strongly, based on all of the research, that Snow White and Captain America Brave New World have cost Disney something like $500 million. Yet Disney is claiming that Lion King and Moana 2, only in January, February, and March, not when they released, just their box office in January, February, and March, that they were basically offset by Snow White and Captain America Brave New World. Now, I don't know about you, but in those 3 months, in January, February, and March, I don't see that Lion King and Moana 2 grossed or profited anything like $500 million. I just don't see that. Now, Moana 2 did extraordinarily well and made a heck of a profit. Lion King Mufasa, we believe, was about break even. That said, this kind of language is what gives me pause. It's what gives me pause is when we know the stuff, when we know that the numbers are astronomical in terms of the losses, and then they present it as if it's not so. That's what always causes me to be skeptical about these earnings reports for Disney. And I think it's why, although I cannot fully tell you exactly what's in the mind of every single investor across the world, but it's why I suspect that these things tend to cause that pop and drop that we've talked about in the past. There's all this very cotton candy excitement around Disney earnings calls, and then as investors look into them, they begin to peel back like an onion what's really going on at Disney. Now, I'm not here to tell you that things are going to get really, really ugly at Disney or anything like that. I'm here to tell you that in terms of cultural relevancy in the last quarter, this was nightmarish. Marvel, Star Wars, completely decimated. Snow White, the fundamental princess of the entire company, completely out in the void. And here's one more line I want to present to you as to why it's not that Disney is unethical or illegal or anybody's going to jail. It's just that we don't believe them because they use language that is both sophisticated and perhaps purposefully convoluted. They say content sales and licensing and other. The line item encompassing studio returns saw revenue shoot up 54% from the year earlier period to $2.15 billion. The company cited strength from Moana 2 as it moved from theatrical to home entertainment. So content sales and licensing went up 54%. And you would say to yourself, well, fantastic. That's amazing. Great job, Disney. How did it happen? And the answer appears to be that Disney bought Moana 2 for Disney Plus. And if you're confused by me saying that, I can understand why. Because the strange thing is that Disney owns many companies, and the company that made Moana 2 and distributed it into the box office sold Moana 2 to another company that Disney owns, which is Disney Plus. And Disney Plus paid this group, Content Sales Licensing and Other, they paid them enough that it increased that segment 54%. Yes, that's money going from the left pocket to the right pocket at Disney, but they don't necessarily make that clear to investors, right? All of this is to say, and by the way, go check out Variety as well. Variety has their thoughts on this. All of this is to say that this is truly the Bob Iger company. It is not being run the way that Walt would ever want it to be run. It is not a company that is gaining in terms of cultural credibility or relevancy, but in terms of financial wizardry. Listen to me closely on this. In terms of financial wizardry, Bob Iger is still a genius. Now, some of you are going to hate hearing that, but Bob Iger and his team, they have done some things that are truly incredible. Pulling off this thing with Abu Dhabi is a huge win for the company. Not necessarily financially, because this is going to be a tiny little theme park where they have a royalty agreement, a licensing agreement that'll be a small percentage of how it does. But in terms of the PR play here, where Epic Universe is about to come out and they make this thing seem like it's a new Walt Disney World Resort level addition to their portfolio, when they don't even own the darn thing, you got to give them credit. That is some PR financial wizardry. And when it comes to things like the box office, where they manage to slide right through without investors really knowing the amount of money that they're losing on it, that's wizardry. When it comes to the sports situation, you got to say that Disney has managed to have an absolute collapse when it comes to their major films. And investors aren't talking about that because investors are so impressed with how college football is performing because Disney has that. That is financial wizardry. It's genius. It's brilliant. But it ain't Disney. It's not Walt. It's something else. It's the Bob Iger company. It's the Bob Iger way. I'm not here to tell you that it's wrong. I'm not here to tell you that it's right. I'm here to tell you that, like Goldilocks and the Three Bears, it's just somewhere in the middle. It's all right. Bob Iger has a company right now that people get very excited on these earnings calls. They bring out all the fireworks. They bring out all the hoopla. The stock, though, if we go to the 5-year, folks, this is what you've been waiting for. It's not good to think that Disney is going to collapse tomorrow. And it's not good to think that Disney is doing great either. Disney has been essentially the same place it has been since 2022 at the end. And if we go to the max out and we go to where we are today, it's basically where we were in 2015. In fact, the Disney stock has been where it is since about April of 2015. It's had one very, very high jump when Bob Chapek was the head of the company and Disney Plus was taking off and they thought they'd catch Netflix. But they bought into cultural battles and they destroyed their ability to catch Netflix. And so today they're still in the same place that they were back in 2015. The reason this last quarter was a nightmare for Disney is because they lost their relevancy. People don't care about Star Wars. People don't care about Marvel. Bob Iger touted Thunderbolts as being a return to focus, and yet it's tracking under the Eternals. Wall Street investors, though, are not asking about that. They're paying attention to a new Disney theme park in the desert that Disney won't own. And for that, you have to say that Bob Iger is the master of mirage. Well played, Bob. Well played. Folks, that is the video for the day. Thank you for coming our way. We have coverage of this all day long, including into the evening. Check out the Pro Channel. This evening, we got the Pro Show at 9 p.m. Eastern following the Valiant Renegade Show. We can't wait to bring you even more. And by then, we'll know what investors are thinking. Will the stock hold over 100 or will it drop again? the play for Bob Iger and his team. The idea is stop the pop and drop. Only pop because of this theme park announcement. All right, folks, like, share, subscribe, click it, stick it to the algorithms. It is the notification bell. Drop a comment down below. Let us know your thoughts. And until the next time, we have the honor, the joy, and the pleasure of spending time with you. This is your pal Pro over and out. Keep learning, keep growing, and keep having fun.
You'd better hang on to your feathers, Zilver. They need to put you in the show.
What? Jose, what are you listening to? You don't even have ears.
Vacation Radio 24/7. Original music on YouTube.
Huh?
Vacation Radio. WDW Pro Music Channel.
I have no idea what you're saying. But if you want to be listening to music, you should head over to Vacation Radio 24/7 on YouTube. One of the 100 other channels WDW Pro's been working on. Oh, and I have a song for you, Jose. Jose Cowabunga. He is Jose Cowabunga.
He's Jose.
That one seems a little bit foreign to you.